Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement, presented by Chris McIntire, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement with Northwestern Ohio's resource for that common sense approach to planning for our financial investment and retirement future. He is president and founder of McIntire Retirement Services. Chris McIntire here with us once again. And Chris, we always appreciate the time and the insight and guidance you provide here on the program.
Hey, my pleasure. Good to be with everybody this weekend.
Always a pleasure. Always good to have you, Chris. Now, today we want to talk about one of the factors in our money management and financial progress. One of those lingering questions, I think, that is in the back of the mind of really all savers and investors, which is, what is the cost of my money? This is a continuing concern, Chris, and we do know that costs matter. There is going to be some cost involved with our money, almost regardless of where we place it or how we choose to manage it, correct?
Yeah, no question about it. You know, it costs you to do things with your money. If you're, you know, if you've got money, we'll just say you've got it parked in a bank CD, for example. You know, you're not seeing monthly management fees come out of that. That's one of the advantages. Okay. As opposed to, you know, what we do, full-scale wealth management, building diversified portfolios for growth, for income, for safety of principles, which can include CDs, okay, and many other types of investments as well. You know, there is a cost for us to do that, obviously, right? We need to make a profit, pay the bills and whatnot. And, you know, in justifying how you are compensated to clients who, you know, the word fee is a bad word, right? So, you know, you can call it cost of management or fee-based. You know, we are a fee-based fiduciary advisory team.
Yeah, I mean, great point. Even when money is in the bank, I mean, I've read articles talking about the billions of dollars that banks make annually just off of transaction fees, right? They are not there nor in the business of not making money or being a nonprofit.
Yeah, no question about it, right? I mean, if they're loaning out at mortgages at 8% and paying you 5% on a CD, you know, depending on how you want to phrase that, right? They're making 3% on the spread or whatever the number is, right? It's not like, you know, but because most investors don't see a deduction in their account for that spread, right? They build it into the overall CD. It just has a different, there's a different thought process in it.
Now, that being said, Chris, I mean, what we've seen over the last 18 to 24 months is that the rates on certain types of accounts at banking institutions have gotten more attractive.
Yeah, no question about it. You know, I mean, we're using money market accounts with a 5% annual yield on them right now. And I mean, who wouldn't want some of that? It is nice to be, you know, making some interest on that and, you know, trying to keep up with that rate of inflation. That's still a challenge, right? Food prices are very high right now. And, you know, many Americans are struggling to make ends meet. And, you know, part of that is because of the rising interest rates and, you know, trying to chase down this inflation, put the inflation genie back in the bottle, if you will, Peter.
Yep. But we do need to understand the costs of our money, regardless of how that's figured into things, and then where we have reasonable opportunity to put our hard-earned savings and investments to work for us to try to outpace inflation over time and provide us some growth. And those are the conversations, ladies and gentlemen. Those are the tools available to a experienced, qualified financial professional, such as what you will find there at McIntire Retirement Services, an independent fiduciary advisory firm. And if you would like to speak personally, individually with Chris McIntire, get a game plan for retirement put together, pick up the phone, give them a call at 800-868-1194. That's 800-868-1194. 800-868-1194 is the number to call. Chris, I think the biggest question or problem that investors have in a relationship with an advisor or in looking at and selecting their investments is that they feel they may not know all of the costs involved. I have no problem paying a fair price for something, but I want to know what that cost is up front, right?
Yeah, absolutely. And, when, from our platform here, it's about transparency. How do we get compensated? And, clients actually have to sign a form that we have disclosed that it's okay to pay us directly out of their accounts. And, if you go back to the old broker mentality where they've got compensated for buying and selling and transaction costs there, that certainly isn't necessarily always in the client's best interest to be compensated in that way, because the more they would buy and sell, then the more money that they would make. So instead of reinvesting dividends, they would take that money, create cash, and then buy you something else and make a commission. I suppose you could call that churning sometimes, is the definition of that, when they're getting paid to make the transactions. Where on the fiduciary side, you don't get compensated to make transactions. You are compensated to manage a portfolio over the course of a year. And there's many different models that you can use in that, in that space. You just have to be transparent in how you disclose it.
Chris, while those trade and transactional fees, I believe, have become less common, it is not that they are non-existent. There are still mutual funds that may charge upfront fees just to buy into the fund, right? 12B1 fees or an upfront commission where you're putting in $100, but maybe only 95 goes into the investment and into purchasing that fund.
Yeah, and that's somewhat, that model is still out there. Some registered reps are compensated by making a sale, if you will. And I think our listeners may be familiar with the term, a load, right? No load funds don't have those upfront charges. If you have an A share, a B share, or a C share type of mutual fund, and you would look on your investment statement and it would say what type of mutual fund it is, and then what class is it? Is it an A, B, or a C? Class A, B, Class C behind that mutual fund, and that would indicate to you, maybe the compensation model. But, in today's world, it is certainly hard to justify, I'm going to put somebody's money into a mutual fund and make a 5% commission. All right, well, already they're 5% behind the eight ball, if you will, versus, trying to find and screen the best, most appropriate fund for them that may have the lowest cost versus the highest cost, if you will.
And Chris, just for that clarity and transparency, that is not the model that you utilize, where there are mutual funds with upfront costs or expenses or load fees, correct?
That is correct. Yeah, we would, we waive all of those loads and everything, of course. Yes.
Well, again, it's important to know and understand your costs. And if you do not feel like you are having clarity in that conversation or that understanding, if you would like an assessment of the costs to your portfolio, your accounts, and your money, pick up the phone and give a call. That is part of the Game Plan for Retirement complimentary review and strategy session that Chris McIntire and the team from McIntire Retirement Services do offer for proactive savers and investors throughout and across Northwestern Ohio. And to get that conversation started, to have clarity and a better understanding and therefore higher confidence about your money, you can have that conversation free of charge, no cost, no obligation, just by calling 800-868-1194. That is 800-868-1194, 800-868-1194. So Chris, so far talking about the cost of the accounts or the investments themselves, but when working with an experienced qualified professional, there are some additional costs for working with an advisor as well. And while studies have shown that investors who work with advisors tend to perform better, especially over extended periods of time, there still needs to be clarity and transparency in that part of the conversation of costs as well. Kind of the full understanding of the different layers of the onion, so to speak.
Yeah, no question about it. And I think, kind of relate it to building a house. You're you're going to meet with a builder and he's going to, look at your plans and tell you how much it's going to cost to build this house. And it's very possible that along the way, you change the appliances. So you have a change order and there's supposed to be disclosure and everything along that way. With us, it's just a plain, management fee. And, based on the dollar amount, here's how much it is over the course of 12 months. Ours breaks down into the month, it's an annual fee broken down into monthly installments. There is how we set our practice up. And that's very common in the investment advisory world, where you're working with a fiduciary, is to spell all of that out. And to be fair, we do a fair amount of life insurance business with life insurance companies, and they pay us commissions, right? And those commissions come from the insurance company, not out of the client's pockets directly. Like you were speaking about, certain mutual funds will do that, pay directly from the client's assets. On the insurance pieces that we utilize for our clients, we get compensated from the insurance companies.
Yeah, but you are not backing nor managing necessarily the components of a life insurance policy the same way that you would have to continue to monitor on an almost ongoing, at least daily basis, investments that are in the market, right? There's a distinct difference there in my mind.
Yeah, no question about it. A lot more maintenance involved in managing assets versus, monitoring a life insurance policy once or twice a year, if you will.
And either way, Chris, I mean, clients typically are not writing you a check each month for that service of helping them to establish and enact and then execute and monitor a plan. I know there are different styles of relationship with advisors and different compensation models, but what you've described on either side with investments that you're helping your clients manage on that ongoing basis, or if part of the plan is shopping for a life insurance policy to complement and protect and go along with it, it is not like the clients are writing you a check from their checkbook directly, right?
That is correct, Peter. Yeah. When we're managing their portfolio of investments, that fee is deducted on a monthly basis from those investments. And if it's not coming out of an IRA, it's not a taxable event. It's just part of the IRA process. We get that question quite a bit. And look, if I got to pay you $1,500 a year out of my IRA, am I going to get a 1099 for that? No, you do not.
Yeah. Okay. Well, again, we are talking with Chris McIntire of McIntire Retirement Services today, talking about the costs of your money, your investments, and your plan, ladies and gentlemen, something that you need to have clarity about in the planning process. And certainly Chris McIntire does strive to provide that with his and to his clients. And if you want to have a better understanding of the cost of your money and investments, it does make a difference, especially if you look over the long haul, over a period of years. As these costs compound, it can make a significant difference. And that's why that fiduciary role with an advisor is so important. Looking out for you and your best interest first and foremost is the top priority, and to help you to understand and control those expenses. But if you would like that better understanding, if you'd like a cost, if you'd like a risk, if you'd like an investment and tax analysis, any of those are important factors. Pick up the phone and give a call, 800-868-1194. That's 800-868-1194. Now, Chris, there again are different styles of relationship for investors who may be more confident in doing things themselves, more confident in executing and implementing a plan, but do want some experienced set of eyes to look over things every once in a while. That's a little bit of a different model, correct? And that can be under a different compensation structure as well.
Yeah, I'm glad that you brought that up, Peter. That's where my thought process was going here for the show is, so let's say somebody came into the office and said, hey, I would like to pay you to do an overall retirement plan for me. I want you to run through some scenarios, or, can you run a Social Security analysis for me and my wife, and maybe they do their own investing. We can charge them a set fee or an hourly fee as well to be able to do that, where your typical registered representative, that's not their business model. Where, as an investment advisor, we can do that. We can charge a one-time fee to do a certain piece. And, and as we as our practice it evolves, as investors evolve, plans are becoming more and more elaborate. So it's very common to say, hey, if you're going to come on board, here we're going to draw up a retirement plan. That's going to cost X number of dollars because we have extra time involved in that piece. And then here is the ongoing management fee of that in a more normal practice. And that seems to be the way that, that the industry is evolving into as things get more sophisticated, as you deal with people retiring with more wealth than ever before.
There seems to be a different level of responsibility and servitude with and between those two models as well, though, Chris. I mean, the plan put together, and then I want to go execute it and monitor it and implement it on my own. While I feel like we could get that plan put in place and pay that fee on a one-time basis, and then be pretty confident that that is a good, solid plan with no additional kind of strings or ongoing commitments attached, my life changes, the world around us changes. And so every time I need to review that plan and make sure it is still reflective of my ongoing best interest, have to come back in and update it again, which may involve yet another expense. Whereas where investments are being monitored and managed by you and your team and your firm, that is an ongoing day-to-day responsibility, right?
Yeah, without question. And I think it's fair to, to put out there that, look, our job is to manage portfolios as efficient as possible using very low cost investments. That's the win-win side of this, right? So, there are certain mutual funds that may cost you 1%, to have the money parked there and running that mutual fund in addition to paying an investment advisor. We might be able to lower those costs significantly by using exchange traded funds or individual stocks, individual bonds, and really discount, what the overall management fee, the internal costs of a portfolio are, and that's how we also justify what we do. Say, look, we're having the internal cost of your portfolio, so your true net cost isn't, the normal fee. We basically have cut that in half by operating and using very low cost efficient type of investments, and then, we also, can help with the Roth conversions, the tax planning, the estate planning piece as well. So there are a lot of advantages to using, the investment advisor who's, kind of overseeing the entire picture here and taking a lot of work. How many people want to sit and interview 3 different attorneys to determine, who they want to choose to do their trust or whatnot, if you will.
Yeah, no, excellent point, Chris. There are many, many facets and assets to your money and financial well-being. If we can realize a tax savings over the course of our retirement or on our retirement nest egg, that may be as effective as shooting for higher returns with a lot less risk involved, and the cost for doing so may be multiplied exponentially by the savings that we experience, right? If we take a proactive look at these different elements, whether it be tax planning or estate planning, and can take some simple steps now to avoid some bigger costs down the road, I think that's where the experience of a qualified professional really pays its dividends and shows its value.
Yeah, and also, you get wisdom and experience, and, you remove that emotional element. So many people are emotionally involved in, their account went down 3 months in a row, and all of a sudden the sky is falling and the retirement is crashing. And obviously, it's not going to typically do that in a 3-month time frame where, we have the emotion to say, okay, take this year, for example. Look, dividend stocks are underperforming growth stocks that got hammered in 2022, and dividend stocks did not.
Right.
And if you're reinvesting, those dividends are buying more shares at a lower price. If you're using the dividends for income, good. That means you're not having to sell as many stocks to create the monthly income need because you've got the dividends coming in to offset that. And, trying to get that message through, and how, people don't understand how investments work. And, being independent investment advisors, we also have access to different types of investment vehicles that, the average person in a retirement lifestyle 2025 fund does not have access to. Things like structured notes and covered call strategies, and, things along those lines that really help boost that yield or that income that, they don't have any idea those things even exist in all likelihood, Peter.
A lot wrapped up there, but Chris, the first part of what you spoke about, I think, goes toward the psychological component of our money in that we tend to have some recency biased, right? In that we only remember kind of our most recent experience. Looking at the market this year, however, is a very, very different perspective than looking at the market over the past 2 years. And then if we look at it over the last 10 or 20, lots of different elements have come together, but we seem to only focus on kind of the most recent set of circumstances and base our expectations on that, which again, I think is where the value of working with an advisor shows itself, as cited by the Research Institute and the Dalbar study, right?
Yeah, exactly, Peter. And, another good example is, if you get somebody that has just retired this year, for example, and they were still putting money in their 401ks through the previous recessions and dips in the marketplace, they're not doing that now. So they're obviously seeing their performance behave differently, because when the market dipped in 2020, for example, when COVID hit, they were still putting money in. So they were buying at incredibly good discounts in the market before it recovered.
Right. I hear people say, well, my 401k didn't go down nearly as much as the market did whenever. Well, okay, yeah. But how much new money did you add to it over that period of time, right?
Yeah. Some of them put $25,000 in, while the market was going down. And then it, obviously they had a very good rebound on the other side of that. When you're not working anymore, you're removing that investment opportunity, and you get into the, I guess we'll call it the real returns of having stagnant dollars, for example, and then creating income, off of the dividends, the interest, and, and even the growth of the overall portfolio. And, it can be challenging at times. In 2018, they raised interest rates. We had more negative asset classes at any time in history in 2018. Okay, 2020, we hit a pandemic. 2022, the effects of government overspending into inflation. Not to get into politics, but that's what Whirlpool does not manufacture inflation. The government does by their spending habits or addiction, if you will. Yeah, that's my personal opinion there. Even if you didn't ask for it,
does seem that way though. They love to talk about controlling the outflow of money, but can't stop spending it somehow. Chris, the other psychological component I think that you touched on there, but I think deserves some real time to discuss is the difference between cost and value. And a lot of times we focus upfront on the cost of things rather than the value. And just kind of a personal example, I've gone on a few different occasions to the local hardware store and looked at my different options for a particular tool. And on a couple occasions, I've made the mistake of just getting the cheapest tool, but then I use it once or twice and it breaks. Whereas if I go and get the more expensive tool, it's better quality, it withstands and holds up better the test of time and wear and tear. And I think that example does transcend a little bit into the financial and investment world as well. We can't just focus on cost. We really need to look at the value of the investments that we own and the advice that we're receiving.
Yes. And, when people are bombarded with information on, don't pay somebody to do this, or, and you're shopping, like you say, for even, a remodeler on your bathroom, and you pick the cheapest one versus the one who cost more and it took a long time to get them to come do the job, but they did the job correctly. Which one do you want in the long run? And, our world isn't any different than that as well, right? I'm not in this to be the cheapest by any stretch, nor am I in this to be the biggest money manager in Northwest Ohio. I don't have that type of ego. We're personally involved with things. We've got Jason and Michelle, coming up to speed here as we merge them into the practice, and, to service who we've got, and, enact in their best interest, and, try to satisfy and give that, exceptional level of service that they've come to expect.
And Chris, just a few reasons why there is a value in hiring an advisor. The advisor works to create a plan that is personalized to you, right? And they can identify opportunities to help protect and grow assets. They build that relationship so that they can better plan for specific needs. A good advisor really is a partner on your financial journey.
Yeah, absolutely. Yep. And, and it's, you get emotional sometimes because we'll have a client that passed away and, you were the third phone call, obviously they called friends and family, but, some of these folks we've gotten to know over 20 years, for example, and, we know a lot about them, and that's very humbling. Life is what happens to plans, buddy.
Yep. And I know as you're talking, Chris, just a little touch there of emotion thinking about a few of those examples. So I'm going to turn the corner here, and once again talking about the cost of the investments themselves. That is another value of an advisor. You touched on it earlier, but different strategies, different types of investments, different tools may have different costs, and where mutual funds are very prevalent inside of 401ks. Oftentimes they can have an internal cost or expense that isn't very clear, that isn't very transparent, but can be 0.5%, 1% or more per year. Whereas with an independent advisor like yourself, there may be other tools and options, such as those ETFs or individual stocks or structured notes that have a significantly lower cost, or maybe even no internal cost at all. So that can, again, make a difference and present the value as opposed to the cost of working with an advisor.
Yeah, exactly. You could buy an income type mutual fund, or we could buy use our dividend basket of stocks that we have, and that doesn't have any cost to buy individual stocks, right? There's no management fee, to buy 3M, for example, or IBM, but there is to buy an income type mutual fund. You're paying someone to manage that mutual fund. So again, there's where we can lower the overall cost on a portfolio and help deliver, smoother rates of return, right? I'm not the person to double your money in 3 years, for example. We deal with retirees, and most of them fall into that moderate to moderately conservative to conservative investment profile. And, not to say that we don't work with some of their children that are certainly more aggressive out there, to be fair. And, I'm personally a pretty aggressive investor myself,
Well, last couple weeks on the program, Chris, we talked about what kind of investor are you and what those expectations should be and what we benchmark against. Sometimes we need to double check the reality of that, because if we are taught and told that we should aim to beat the market, but then we are ourselves a very conservative investor, those two realities just are not in alignment. And we need to have a true understanding of the kind of investor we are, the kind of risk tolerance and capacity that we feel comfortable with, and then the kind of risk exposure that our investment portfolio has. And finally, to wrap up the program, I think that is another great value of working with a good advisor, Chris, is that they are going to have those conversations, and they are going to help you better understand and explain, and then put into alignment that portfolio and your mix of investments with your risk tolerance, your time horizon, your individual specific situation and goals.
Yeah, absolutely, Peter. And, and to truly act in somebody's best interest and look you in the eye and be able to say, look, I'm here to make this a win-win situation. That's what we do all day, every day. And, And when you deal with investments, there are a lot of variable type of results out there, and sometimes it's frustrating, no question about it. And, that's why we deal with a lot of the safe money strategies as well, Peter.
Well, to sum it all up, ladies and gentlemen, you do need to have a clear understanding of the costs to your money, what you are paying and the value that you are receiving for it. And regardless of where your money is, there are some costs or expenses, whether they are completely transparent, whether you see it in bold red print right on the front cover, or it could be as subtle as transaction costs or the difference in interest rates. There are always costs, opportunity costs, and you need to understand what they are. So work with that fiduciary kind of advisor, one that will explain that to you, that you get a true understanding of it, and that you can understand and realize the value for whatever costs you do have involved. And Chris McIntire puts comprehensive plans together, several elements of which don't have any cost whatsoever, such as helping you to optimize your decision on Social Security, or doing some of that proactive tax planning, or knowing and understanding where certain types of legal planning may be necessary and involved. Those are the kind of things that you get a better handle and understanding of, and therefore more confidence in your long-term plan when working with Chris McIntire at McIntire Retirement Services. Pick up the phone, give a call, because there's also no cost for the initial review and consultation. This is your opportunity to get a better handle on your plan with no obligation and no expense to you. That is the value of this program, to get that conversation started and begin to move forward in the planning process, or review the current plan. If you've already got the pieces and you just want to make sure they're all put together in the right order, give Chris McIntire and McIntire Retirement Services a call. 800-868-1194, 800-868-1194, 800-868-1194. You can also visit online, McIntireRetirementServices.com, McIntireRetirementServices.com. Chris, once again, always a pleasure to have you here on the program, my friend. Thank you for being the resource that you are for proactive savers and investors across the Western Ohio.
Hey, my pleasure, buddy. Everybody have a good weekend out there. Thanks for listening today.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.